right, guys, what is going on? Welcome. Welcome to the live stream. It is Tuesday. Right, take partial Tuesday, if you will. Give me 1 second here. I forgot about the trim. There we go. There we go, chat. There we go. Let's see. Adam was first today. Welcome. What is good? Roberto, Slowly, Akil, Eberneth. Eberneth got funded again. I was waiting for her to post in the testimonials. We'll see. We'll see. Was good. 2020 Mark. Appreciate that. Elite. And yeah, congrats to 2020 for being a member for 36 months. Okay, yeah, so it definitely has been 3 years we've been on here. That's a long time. My goodness. I wonder how many curse words. Anyway, what's good? E. Tordy, Capitalist, Jorks. What is Gucci, gang? So, I know I said a lot of things today. I did like ES, and I love when we do stuff like this. We leave behind equal highs, beautiful. We leave behind another set, beautiful. We trade, like we leave a little bit of like a double bottom, not a double bottom, but it's close, right? And get some lows in prior to Monday's low. So those are basically going to be engineered lows, or like the lowest one in engineered low. And then when you sweep that, oh man, it's beautiful after that, because this may not be a complete buy model here, right? Like I don't think we're going to do that now. But at the time, though, right? 1050. Oof, random time, right? Random, obscure, made up time frame, or time window, rather. Time frame, time window, whatever. We get that nice little pop, right? That was basically the next candle entry or the low risk buy. This could be seen as a low risk buy as well. And then rallying up to those highs there, that was easy. And then what I wanted to see was higher, but this was easily given up. And this is weak sauce. So this may not be the low here. I mean, it could be, but I don't know. It's hard to tell. It is hard to tell. It was good, Yuso. So that is where we're at for ES. I do think there was really good scalping opportunities to go higher. I personally wanted to see a continuation. I don't move the markets. I don't control them. So it's not up to me. And we are lower. So weak sauce doesn't seem bullish. We may be heading for lower pricing. So if we look at NQ today, good gracious, this is Dookie Trash. Dookie Trash. And funny enough, I know we talked about this yesterday, seeing a potential sell model, right? But number one is the time constraint. And number two was that higher time frame high up here. And I told you that I told you the second leg of accumulation is the worst to short, right? If we, and you'll notice this over time if you've never noticed this before, it's not every single week, but what I've noticed, and hopefully you've noticed it too, but a lot of the times it is almost better to skip Monday entirely. Let Monday form and then go in and start looking for setups on Tuesday. So the reason being, why? Yeah, shit, I don't want to tell you. Why don't you tell me why that would be a good idea? It's very similar to the idea that the PM session, for the longest time, and sometimes I still do think that the PM session is better than the AM session, but why would I say something like that? Why would it be all right for and again, it's not every single week. Like, obviously there's going to be trade setups on Mondays, but Tuesday usually offers wonderful opportunities. I mean, think about it. Yesterday, for a lot of people, was kind of strange because, again, we left behind equal lows. I know I talked about that extensively yesterday in between all my ranting. And, you know, I sort of explained how, yeah, this could be the soup to go lower, but I'm not trying to pick the high. And then we end up going higher and we just fade off into the close. And then it wasn't until our, like, Tuesday candle basically forming that eventually dropped us below for the trailing stops. Right. But now you kind of see, okay, with that information, though, how could have that English? How could that have helped you today? How could waiting for Monday's candle to print and then waiting for Tuesday, how could that be beneficial? Yeah, sometimes, Miguel. I don't look at every concept every day. Okay, there's a lot to look at. So not always, but midnight open it's midnight New York technically, but it is a good reference point. Same for equities open. Oh damn, Adam, that's some premium insight though. He said, "Yeah, my journal says Monday never works for me." Why do you think that is, though? And there's a few different answers coming into the chat. I'll read them. Julia says, give price a chance to show what it wants to do. All right. I'll allow it. And Tuesday is always my biggest win of the week. Now, why do you think that is? Capitalist said, Mondays and Fridays seem to suck. Probably for the same reason. People are excited to make money on Mondays or rush to get into the market. Okay. I'll allow it. Okay, Capitalist, that's kind of more of along the lines of what I was looking for. So Capitalist said, if you wait, you have more market data. Yes. That's it. And it goes the same. That's why I asked you earlier, why do you think I've always said the PM session is generally better than the AM session? Because in the PM session, you have lunch, but you have AM session to work with. So if AM session liquidity is open and we start attacking that, then that's usually an easy bias for the PM session. So, what's good? I'm good, man. I mean, it's kind of rainy and shit, but I'm good. I have no complaints. Matter of fact, sidebar, not paid sponsorship, but I found the new flavor of Ghost Bubblicious. Look at that. Can y'all see that? Bubblicious. Bubblicious. Kind of reminds me of your mom. So it's pretty good. It's pretty good, I must say. But anyway, lock in. With Tuesday, okay, going into equities open or maybe pre-market, possibly London if you're up for that, that's fine. But my point is, why is Tuesday often better for traders to wait? Like, let Monday's candle form, because when Monday's candle forms, when Monday's candle prints, you have Monday's high and Monday's low to work with. Now you're going to have that, of course, in electronic, and you're going to have that in regular as well. So, for example, I'm pretty sure everybody and their mom noticed those equal lows yesterday. And I bet a lot of people tried to jump the gun and go short for those lows before necessary, right? A lot of people probably did that. It's just a guess. Rallied higher instead and then faded off into the night like Batman. So Monday's high is here. London's low is also equal lows. And then Sunday's open is down here. Now I'm not as worried about Sunday's open as these lows are. We can't even get to Sunday's open without hitting those lows anyway. So that's my point. When Monday closes, and then like we get, more candles to print, now we have a little bit more information to work with. We still have that higher time frame high up here. Actually, we don't. We do need to switch over contracts before I forget to tell you that. We do need to do that. But up until today, you still have the higher time frame high up here. And then with this information, you've got Monday's high. And still those equal lows, right? And then Sunday's open as a potential. So as we move forward, and you already know what happens, but as we move forward, right, we start to see what still? This is still a consolidation. That's still an original consolidation. We trade off of it. Expansion. What do you know about retracements? I know, Scott. Have a good one. Retracements are what? Slow and shallow. Go look at my Instagram. It's there. That's what retracements look like. Expansion is quick and the candles are large, and then retracements are slow and shallow, and then the continuation. That's in phases of price. That's on my Instagram. Like, that's everywhere, right? And it's there. And you see that same thing here. So we saw expansion fade into the night. And then London, right? What did London do? London took us higher, and then look at how we made the high. How we make highs or lows is always important. And yeah, Miguel, I have had the 7-Up. It's okay. Nothing beats the blueberry one, though. It tastes great, and it reminds me of fat people. So I'm always like, hee, so yeah, I know. Anyway, that high with a higher high, what is that? A higher high above an old high is a turtle soup. Turtle soup, chat. Y'all know this, right? Turtle soup. We get expansion lower. Fat suspension here, actually. So we have a suspension block, if you'd like, suspension for short, but a suspension right here, and then kind of a short-term mitigation right there as well, right at equities open. So it's manipulation, low risk short, and then this would be first leg, and then this is pretty much all of second leg of distribution. And this should be red. And that should be pink. So buy side delivery, manipulation, sell side delivery. You see that? So the model, right, that people were looking for yesterday, the market maker sell model for yesterday, that did not pan out. But when you allow price to print, right, you have to allow liquidity to build. Do you guys understand it? Drop a 1 in the chat if you guys understand that. The market is not going to always be this sort of thief in the night. Or if you guys remember a long time ago, I referenced the Apple Store. There was a group of people, we'll say, that went into an Apple Store, took all their stuff in under like a minute or 2 minutes or something. It was crazy. Most of us saw the video. They busted in, took all the iPhones and iPads and all that, dipped out of the Apple Store. It was a robbery, right? That's smash and grab, right? I'm glad you remember that. That's quick and dirty, okay? Now, the markets will do that when they're getting ready to attack opposing liquidity, but the markets, people would not trade the markets if they were so erratic that people would be scared to trade. Let me see if I can explain this a little bit better. If the markets like made some highs and then ran them and then ran the lows and then came all the way back up again, like, and it was just super erratic like this, okay, people would not trade. They would be too scared, right? But when the markets are slow and there's like hours and hours that go by, that timing, right, is allowing traders to place their orders, place their stops. If they're long, you know, they're going to put a sell stop somewhere, or if they want to be bullish and they want to buy above old highs, they'll put a buy stop somewhere. Or if they're bearish, they'll put a sell stop somewhere. You know, buy limits, sell limits, all this kind of stuff. Orders are going all over the market. And by having these slow retracements, by having these periods of consolidation, that is what is allowing for traders to either put positions in or adjust positions, right? That move higher, you're going to have stops at these lows, right? That move lower, you might have trailing stops that get yoinked to go lower. So this is why things do not work out as quickly as you would like. You can always start to see a market maker model form. And you might get excited like, oh, we have equal lows, let me short down there. No, that's wrong. As traders, sure, we want to short down to equal lows, or we want to long to equal highs or something. But you got to remember the markets are not on your time frame. We have to adjust to the market's time frame, if that makes sense. So drop a 2 if you guys understand that. It takes time for liquidity to build. Okay, you can't just have a 5-minute candle that prints 200 points and then another 5-minute candle that prints a couple hundred more points, like as if smart money would come in and manually just rape everybody like every day. Nobody would trade. It's too chaotic, it's too erratic. People would be scared. But when you have clean, that's open for interpretation and it's debatable, but when you have clean price action and it's slow and you actually see equal lows form or distinctive low forms and stuff like that, that's when you get liquidity building up to then run it later. So I say all that to say, that's why to me, PM session is often better than AM. Not always, but a lot of the time. And Tuesdays arguably are much better than Monday on average, because you have that information to work with. Let Monday's candle print, allow the high to form, allow the low to form. That's both an electronic and regular, right? Because the regular trading hours low is right here at 30,302, at least for the June contract. So, and you can see that here. That low, that's yesterday's high. we souped in the pre-market, gapped lower, offered buy side, and a little bit after that, 9 o'clock, and then the wreckage. So, and that's it, really. The more it consolidates, the more I can't read. The more it consolidates, people form more opinions. Right. Okay. So anyway, what I really didn't care for today was gold, bro. Like gold, I'm not shocked, okay? But it like didn't meet my expectations. So if I didn't say this in the Discord, then I definitely dropped the ball. But if you looked at gold, you would have noticed we do have a small set of highs here. So me personally, I thought this last imbalance here would be enough to give us that second leg to go lower here, right? Triple lows. Although we don't have manipulation, we do have, and I can guarantee you a lot of people did not see this. But that's okay. I teach you shit that a lot of people don't. And y'all know this. Y'all know this, okay? I know, I gotta stop. But it just feels too good, chat. Feels too good. Okay. That old gap from March 26th and 27th. Now, this is the continuous contract. But still, that old gap, can y'all see that? Yep. That gap here, all right? We traded through that on June 5th, came back into it on June 8th, one more time on June 9th, larger imbalance here. Yesterday, rallied one more time above June 9th's high, lower. And then today, basically, again. You see that? Isn't that weird? Totally random and unpredictable, right? It doesn't make sense, chat. Why would the high be there? I don't know. I don't know. What time is that too? Could it be some random and obscure, unknown, unbeknownst, or whatever the word is? Right? Oh, that's fucking weird, isn't it, chat? 7:50 rallies into 8 o'clock and then lower. So we have an old gap. A little head and shoulders pattern here too. For those of you that like that shit. But anyway, this high here, London's high, pretty much ran in New York, souped, and then low risk short inside of that. That's what I get for sleeping in. Fucking missing that shit. Right? Way up in there. Massively lower. Into a discount. Back into a premium above these highs. And then this to me looks kind of bearish, but this is why to me gold is not as easy as it should be. Gold, y'all know this, but gold is the most manipulated asset there is. So it's just some highs, ran at the right time, at the right price. Okay. But these markets aren't controlled, right? This is a free market and it's all ran on supply and demand, right? After seeing some shit like this. Interesting. And so, yeah, me personally, I didn't think we would do that. I thought we would go lower. So, you know, it's cool. I like getting it wrong sometimes because it shows you that I'm human and it shows you that I'm not perfect. So that's pretty cool. But at the time, earlier today, this just looked heavy. And although it's not a sell model exactly, because obviously with Monday's high being way up here, it didn't trade into that, but it doesn't have to. This enough can still be manipulation. And then the low risk short, first leg, second leg. Only I just didn't expect to go back this far into a premium. So. And they do, Torty. They do. And open interest. So that's why we have swapped over. Or at least should swap over. I haven't swapped mine over. I'm still on the June contract, but I will switch them over later probably. So I do not have a lot of expectations for the rest of today. This doesn't look like a market that I want to long. Dow of all things is much higher. So that's that. And NQ is weak. Definitely weak. So this doesn't seem like a good day to long. You know what? That reminds me. I'm pretty sure yesterday, didn't I talk about on yesterday's live stream that I would prefer if we traded lower back into this gap or maybe down into Sunday's gap? Didn't I talk about that yesterday? Drop a 3 if I did. Don't say anything if I didn't. But drop a 3 if I mentioned that. Like, yeah, I would prefer. Yeah. I said if I was a greedy old bastard, I would take it lower to reaccumulate more before going for those highs. And so today is sort of in alignment with that. It's just not very, it doesn't have a lot of speed. Like Sunday gapped up and continued. And today's been just kind of slow. In relevance to Monday's expansion, this has been slow. But that's sort of, with the exception of NQ, that's pretty much in alignment with what I talked about yesterday. So that's kind of cool. All right, what questions do you guys have so far? Do you have questions on market maker models? Do you have questions on macros? Do you have I don't know, like what are y'all thinking, chat? The drawing you dropped in the Discord shows a retracement to the weekly open. Well, yeah, Cameron, that was prior. That drawing was prior to Sunday's open. But on Sunday, I went to the charts, Sunday night or whatever, and then just took that screenshot of that, like of the chart. But the actual original drawing was from Friday. Because on the weekends, I don't know if it's going to gap up or down or just have a small gap or no gap at all. I have no idea. I have no method to accurately predict Sunday's open. So I don't try to do it. Why is Dow not correlating with the S&P and Nasdaq? Why do you think, Miguel? They are vastly different measurements. The drawing you posted shows the open and London price action. Oh. Yeah. I don't know. Yeah, that was taken yesterday. But all those drawings were done on Friday on our member only stream. I'm pretty sure. I definitely need to go back to Friday's stream and look for it. Can you explain the contract switchover? Yeah. So futures contracts expire. Okay? Just like my patience for these bitches. They expire. All right? They do not last forever. Okay. They don't last forever. And so you can't hold trades for a year. You would have to then close your current contract, open that same position on a new contract. So once upon a time, okay, you ready for story time? Once upon a time, many, many moons ago, there was somebody, I don't know who, but somebody thought about this. And they said, you know what? Corn, wheat, pork bellies, coffee, orange juice, cotton, all of these like physical commodities, gold, silver, whatever. Okay. Somebody had this genius idea. They said, bro, the price of corn is too wild. The price of cotton is too erratic. All these things are too erratic. And as a farmer, as a producer, a physical producer of products, we'll just stick with corn, okay? I'm a farmer. I produce corn. I sell corn, and I make a living selling corn. But because price is so erratic, I don't know if this is going to be a good year or a bad year or a couple bad years or a couple good years. We don't know. Because we can't predict the weather 100 years ago, 200 years ago. Shit, even today, they can't predict it. Fucking Apple app, weather app is dog shit. Anyway, so they needed to come up with a plan and say, okay, how can I lock in, new low of day here, by the way. How can I lock in the price of corn? I want to sell my corn at a minimum of, I don't know, $2 a bushel. Like I want to profit at least $2 a bushel. Anything less, I'm going to go bankrupt. Anything more, I'll be super profitable, but it's not, sustainable. Thus came the futures market. So they said, okay, if you plan on producing, 5,000 bushels of corn, right? Then what you can do, since you are long 1,000 bushels, you can short 1,000 bushels on the futures market. So that way you're hedged. Now, because you're long 5,000 bushels and you're short 5,000 bushels, you are locking in that difference. You're locking in that price at $2 a bushel, right? That you want to sell for. So guess what? If the market goes down and you sell your bushels of corn at a loss, that loss will be offset by the futures market going lower. And vice versa. If the price of corn goes up, it's still going to be offset because you were short those 5,000 bushels still. So you're going to make $2 a bushel no matter what. That's why the futures market was created. So, at least commodity futures. So what agriculture, okay, what they're doing is they're passing along the risk to speculators like you and I. We can take on risk, or we choose to take on risk, right? Whereas the futures market for commodities was more so designed for hedging, basically. Does that make sense? So now there's sustainability. It's not perfect, obviously. There's math involved, and nothing's going to be down to the dollar. But generally speaking, that was why the futures market was created, at least for agriculture. those contracts expire because there has to be delivery. If I grow 5,000 bushels of corn and now I have the corn, what do I do with it? You have to sell it. You have to sell it to Walmart or Kroger or whoever, right? Probably have a contract, but you get what I'm saying. So that contract is like, okay, you're growing 5,000 bushels of corn and we're going to take delivery in September. Okay, I got my corn, I deliver it in September, and that's it. So that's why contracts expire. There's physical delivery. Well, probably not anymore, but at least for speculators, we don't get delivery. Okay, you can buy contracts of oil. The contract, can expire, but you're not going to get barrels of oil at your front door. There's not going to be a semi truck that's just going to come by and dump all these barrels of oil in front of your house. So futures now, at least for speculators, are cash settled, not physical delivery. So does that make sense? It's just a long-winded way of saying that's why contracts expire, because physical products need to be delivered instead of just this continuous, never expiring contract. When you sign an agreement to buy something, right? You agree to pay this much every month, or something like that, right? So hopefully that makes sense. He said, I'm off to go read a book. This price action hurt my eyes today. No, I get it. We all made, not we, but like NQ made lower low. ES made a lower low. YM is the only one who definitely has not. So we'll see what we do here. This is a much more pronounced run, or sweep rather, below Monday's regular trading hour low. You see this here? If we take Monday's low, that was tapped into 5 ticks. But now we have like a 4-point run, or a little bit more. 4 points and a tick a little bit below regular trading hours low. See that? That first one. Now we have that second one, and it's further reaching for more liquidity here. So this could probably be the low of the day. I don't know, dude. It's hard to speculate here. It really is. We have that old gap here too. So I mean, we could come down for that. We could come up for these highs. I don't know, dude. I don't like it. I don't like it either way. How quick or slow should you in general move your stop loss to break even? Well, I think that depends on what stage you're trading, what your model is too. Like, you can go break even quickly. I mean, you can. Doesn't always mean you should, but I think if you're trading based off of something on a higher time frame, like if I was strictly trading on like a 15-minute, right? I would have to wait probably at least 2 or 3 candles before going break even. Because I mean, you could be longing right now, go break even after a couple points, and then the 1 o'clock hour comes in, gets you out, and then runs. So I would give it a few candles on whatever time frame you're trading on. So if you're on a 1 minute, yeah, you could probably go break even a lot quicker on a 1 minute than you could a little bit more of a higher time frame. So, but I would say don't be in a rush to move your stop. Moving my stop, I think, hurts traders more than leaving it alone. I mean, it depends, obviously, but I think once you learn precision, moving your stop quickly does become an issue, because you want to get in and then see your trade, Go higher if you're bullish or lower if you're short and bearish. And when you don't get that, it's like almost irritating for you. So try not to be in a rush to move your stop. Okay. On the 1 hour from the low, 72.31.75 up to the all-time highs, which are also equal highs on ES because we've already crossed 50%. How likely are we to get back down to the 50% of that current range? Or should we stay above it? I think we should stay above it. I don't think we should go back into a discount. Reason being, for many things, but we have already, by we, I mean like price. If you look at the level of delivery down here, we saw buy side, we saw sell side, right? We already got manipulation, and we've done a lot of business down here. Okay, we got some price here, we got some price here, we got a lot of price here. So if you look at just how many times price has went back and forth down here, right, between 72.32 up to 73.25, we have buy side or sell side, buy side, sell side, buy side, sell side, buy side again. So we've worked this area quite extensively. Price in here, similar story. We saw a lot of buy side, and then we got this consolidation, this back and forth. Okay, a little bit of sell side, buy side, sell side, buy side. We got a lot of business, a lot of transactions being taken place. So we got that down here. We got that in here as well. If we are bullish, price is allowed to retrace. Okay. But if we're super bullish, we should not see deep retracements. So to me, and again, I'm always susceptible to being wrong, but to me, it wouldn't make sense to come back into a discount. We traded above 50% and we've already worked a lot of that discount in here. I don't think we should do it again. I think that old gap reclaiming should be enough. If it's not, we also have Sunday's gap. So we would have to essentially, in order for us to go back into a discount, we would essentially have to do both. We would have to go through that old gap being a reclaim. I'm anticipating that's going to be reclaimed. We would have to go through Sunday's gap to get down here. That probably would negate my opinion on being bullish. I don't think we should do that. Does that make sense? Does that answer your question? That's why. If you ever look at, okay, and this is where studying comes in. I mean, I'm glad you asked the question, but this is where studying on your own comes in. If you look at market maker models enough, you'll see, and nothing's 100%, but you'll see a lot of the times, the majority of the times, that means 6 out of 10 or better, 7 out of 10, 8 out of 10, but just scale that up. 80 times out of 100, 70 times out of 100, meaning majority, okay? Majority of the time, when we have a market maker model and we get above 50% and we go back into a discount and then we're in a premium, we usually do not go back into a discount again. Majority time. You will see that. You will see instances of that. But if you had to ask me, I would say more times than not, we shouldn't do that. Yes, we can retrace. Yes, we could even get Sunday's gap. I don't think we should get Sunday's gap, or at least the low end, right? And I think we should go for those. So again, if I'm wrong, then the drawdown won't matter. Because then it's like, okay, if I'm wrong, I'd rather just exit and take a small loss than to go and just let my stop be hit. I'd rather just take a smaller loss. But usually, I'm probably going to give it 2 to 3 candles. If I'm not in profit by 2 or 3 candles, I'm probably going to be wrong. But it also depends on which stage that I'm trading. Okay, if you're trading the manipulation or like the low risk buy, absolutely. That should be 2 or 3 candles at most. Now, where traders, I think, get a little bit tricked up or tripped up is on like the later entries. I forget which one's teal. Is it that one? Something like a low risk buy or like a next candle entry, right? Like a new 15-minute candle here. That should be 2 or 3 candles and you should be in profit. Now, if I'm trading something like this, where it's like, oh, we have down candles, let me just long it now, instead of waiting for price to trade higher and then maybe trade back lower, then yeah, you're going to have drawdown because you're getting in and not allowing price to trade lower and then getting in. So like that would negate that criteria of 2 or 3 candles. Does that make sense? So usually it should be 2 to 3 candles. Anything more than that, you're probably going to be wrong. So, but don't take that as like your concrete rule. Well, John said it's got to be 2 or 3 candles. If I'm not in profit, it's probably going to be, you know, trash. Just study that. On the next few trades that you take, however many it is, whether it's real, whether it's paper, whether it's combine, whether it's funded, whether it's a RR tool, I don't care. Either way it goes, just test that. Whenever you enter, give it 2 or 3 candles. And out of your next 10 trades, see if that isn't the case. 2 or 3 candles went by, I'm in profit, it's probably a good trade. 2 or 3 candles went by, it ain't looking good, it's probably not a good trade. Just see what your results are. So hopefully that helps. But I mean, to be fair, you guys actually came in with some pretty good questions today. I like it. I like the good questions. So, like I said earlier, when we were doing this could be the low of day. We could end up, you know, trading back up into this. Here's what I'll end it with. I would have loved this as a buy, or even like these down candles here as a buy. I would have loved that if we did not do this earlier. Because on a 1 minute, I mean, you can see it on the 5-minute too. It's just a little bit more close. The high on the left is a little bit more closer to the other candlestick, so it's hard to see. But on a 1 minute, like you can clearly see, yeah, those are clean highs, low resistant highs. And if we would have left those open, just like this, like leave those open, not do this. Like if we had this high, maybe a little bit lower, like here instead, and then do something like that, yes, then I would have much rather seen this be a buy, because then we could wreck, maybe not all of them, but at least like this would be the low hanging fruit. This would be easy. That maybe. But the next available high is always your low risk. Your low risk. Your next available high is always the low hanging fruit, right? So in this case, the low hanging fruit would be that. Is that blue? I think that's blue. Yeah. Right. Shift and stay delivery. Anybody that's been short all day, they're going to have stops at this high. The next obvious one is this. So if we are going to have a reversal, this is the low hanging fruit. But because those highs were like tapped into a little bit to go lower, I just don't really care for that. I still think there's going to be liquidity there, but I would have rather had two pools together, and I would have been all over that. But we didn't do that. We sort of just tapped into it to go lower. So, you know, it's hard to say, but I would have preferred that. So hopefully that gives you some insight. Dollar index is the dollar index, and we're back in that old gap. I think that's becoming an inversion. And we left behind a small set of equal highs here. So I would keep that on your chart. So yeah, we have left a lot of highs and lows all over the place, right? Dollar's got highs. ES has highs. Let's go back to gold for a second. Gold has triple lows, which if we're not going to attack, then yeah, we're probably going to trade higher and end up maybe taking that high, I guess. But I don't know. It's hard for me to trust going long with lows like that. So I won't be doing it. But that's like the business for today. So plenty of pools being built, pools being created. And, you know, that's it. That's the business for today. So with that, I will close it here. Y'all be good, be blessed. If you have not, okay, let me show you this real quick. I know I said I'd close it, but you know, do I ever really close? You know what I'm saying? Do we ever really close on the first try, chat? Do we ever really do that? Do we ever end it on the first the first time? Field notes, chat. Look at these, man. They just came out with a new series. I guess it's called Get Up and Go. And they have some cool stuff, dude. I can't remember if it was this one or let me see. Let me see. Oh yeah, here it is. Okay. So the Explore America Monumental Memo. So I just ordered these yesterday. I ordered all of them. I'm not sure if y'all can see. I think this is the biggest image that's available. Oh, there we go. Look at that. Golden Gate. Some woods. Whatever that is. Continental Divide Trail, Appalachian Trail, and the Pacific Coast. Man, these are pretty solid. Look at the birds up here, dude. Look at that. So these are pretty badass, man. I gotta tell you. So all in all, it's like $30, right? Because you got there are two different packs, so you got to buy like the Series A and then the Series B. So I don't know. I like cool shit like this. Maybe you don't, but I love field notes. I'm almost done with this one. I have plenty of more, and they're really cool. Okay, it's not just being cool, you know. That is kind of fun, the outside really doesn't matter. But it's how you use it, right? Writing down the to-do list. I know, Sully, I know. And I'll show them when I get them in too. But it's using them for stuff like checklists or quotes, you know, ideas, book recommendations, all that type of stuff. And it's something that you want to keep on you at all times, especially when you're on my stream, because you never know. When I tell you stuff about field notes or about a book, 48 Laws of Power, which you should be reading. Book of the month next month is The Monk Who Sold His Ferrari. And when I say these things like that, that's the type of stuff you need to write down. Or if somebody has a question in the chat and I'm saying that question out loud and giving you my answer, stuff like that you can write down. So I haven't been using these very long. I mean, I've been journaling for a long time. Years. Many, many, many years. But like the field notes is like a sidekick, bro. It's like the Robin. It's like you're Batman and the field notes are Robin, you know? A little sidekick to stay organized and not forget cool ideas. And Elite, there's plenty of other let me go back to the website. There's plenty of other designs that they have. But I will tell you this. There's a brand, Fabriano, which is Italian. So if you're overseas, you might be able to get that one. If you are from Japan, right, you have the Robokai or the Midori. Those are Japanese brands, I believe. Field Notes is American, I'm pretty sure. Like built, yeah, made in the USA. Oh, there you go. But like every culture, every country, I'm pretty sure has their own version of pocket notebooks. So I like Field Notes because they look great, and obviously, you know, if they're American and I'm here, that's easy for me to get. But just whatever country you're in, just look it up. Just look up pocket notebooks. And you will find some. Listen, arguably, the Robokai, the Japanese ones, I actually like those better than these. And I like the Japanese pens too. The Uni Jetstream, incredible. And of course the Pilot Metropolitan, amazing. They're both Japanese. So anyway, last question. New to futures. If I'm trading Lucid trading using Tradevate connected to TradingView, brother, I'm already lost. I'm already lost. You got a lot going on here. Tradevate connected to TradingView. And I have an open trade. Can I close TradingView, or it needs to be open while the trade is active? No, you can close TradingView. But you got to remember, so for Lucid trading, they're going to have rules, you know. So whatever rules that you have, you can't hold overnight, you know, don't hold overnight, right? But yeah, you can literally just exit TradingView and nothing's going to happen. So, all right, y'all be good. Be blessed, man. I'll put out a market view later this evening for our members. And for everybody else, I will see everybody tomorrow on Wednesday the 17th for the next live stream right here on YouTube. So make good decisions. And I'll see you tomorrow.
I remember it different. Or maybe I just remember how it felt. Everything was slower then. Or maybe it was just me. I've been drifting through the old days. Faces fade, but the feeling stays. I can't tell what was real now. Just a blur in the gray now. I've been walking through the same haze, the same roads in a new phase. I don't know where it went now. Just a time didn't move so fast. Long nights felt like they would last. Street lights glow in a softer tone. Now I pass by, it don't feel like home. Voices echo but far away. Names I knew start to drift and fray. Pictures stuck in a faded frame. I still look, but it's not the same. I was there, but I feel removed. Like a life that I never proved. Every step that I thought was clear turns to fog when I reappear. Maybe I just outgrew the space, or the world put on a different face. See the way I can recreate what it was in a younger state. I've been drifting through the old days. Faces fade, but the feeling stays. I can't tell what was real now. Just a blur in the gray now. I've been walking through the same haze, same roads in a new phase. I don't know where it went now. Just a ghost in my head now. It don't hit like it did before. Still I keep coming back for more. Maybe I'm just chasing life from a place I can't rewrite.